So guys, welcome back to my channel, guys. So it's another day in my life and I am grateful to God for keeping me alive. I'm really happy for you guys coming back to watch my videos. Thank you so much, guys. So we have hit 1,000 on this channel, which I'm grateful to everyone here, especially those that have subscribed. I noticed that majority of people watching this channel are yet to subscribe. So if you're watching and you have not subscribed, make sure you subscribe. So I'll go straight to the point. So I'll be going straight on my laptop now to show you guys how I trade with the CRT model. The model I trade, I'll be sharing everything with you guys now. And this is a mentorship video, but I'll be sharing it with everyone. If you are interested in this sort of content, make sure you subscribe to this channel, guys, and watch this video to the end. So I'll be going out after, I don't know if I'll be able to finish the video before going out to take my breakfast, because I'm very famished. And let's just go on my chat and let's see what we can do before I go out. All right, so and you can use the link in the description to register a derivative account, which is my recommended broker. They have been around for over 25 years, so they have the good track record and all. And you can also join my free Telegram community to enjoy free trading setup and other tips to become profitable. All right, so let's go to my screen, guys. What's good, guys? So welcome back to my screen, and in this video I will be taking you through my charts, and I will be explaining the CRT model I trade for you guys. I had CRT, SMC, I had everything together to create my own personal strategy. So that's what I've been trading for a while now. So guys, if you are enjoying this sort of content, or if this is something you're interested in, make sure you subscribe to this channel. And I drop weekly videos every week, so you can learn something. You can join my Telegram community also, and if you want to sign up with my recommended broker, I recommend Berry for you, because I trade synthetic indices mostly. All right, and I have been taking a lot of losses lately, and guys, it's already messing with my head, so I'm thinking of diversifying. So this is the chart of Euro USD, and I'll be explaining my entry for this trade and how I use the CRT model. So when you keep taking losses like that, just take a step back, relax, and come back again fresh. Understand? Have you ever witnessed when you are taking a buy, it's selling, when you are selling, it's buying? It's as if everything is just against you. So all these things happens at times. It happens. So we still keep doing the same thing, and everything will change. Just make sure you are modifying, you are learning and relearning whatever you're doing, so that you will not be behind. All right, so let me explain what CRT model simply means. Now, whenever we are talking about price will either be bullish, breaking structure to the upside, just like this, or price will be bearish, breaking structure to the downside, just like this. You can see we'll be having a series of lower highs and lower lows, and for the uptrend, we have a series of higher highs and higher lows. This is just what price does every time. We will not see price moving in one direction, right? So if you learn this model, you can use it to trade your prop firm. You can use it alone and you'll be profitable. I am serious about it. Last year I made the most money in my career as a forex trader. Last year. So let's just keep going. All right, so now this is what CRT model is all about. When you see a candle, let's say this is a candle like this. This video will not be too long, but if you want a better explanation, I can do that for you. When you have a candle like this, let's say we have a candle, and you know, in a candle we have the open, the close, the high, and the low. So let's say we have a candle like this. So we have a candle like this. All right, let's say we have the candle like this, and this is the wick of the candle. Let me just draw that out very well for you guys to see. This is the wick of the candle. All right, this is the wick of the candle, and this is the body of the candle. Now we have this is, let's say this is a bullish candle. We have the open. The open is somewhere here. We have the open, the close, the low, and the high. All right, so this is where it's open. This is where the candle opened. It opened around here. Candle opened around here. You have the open here. Candle opened around here. I don't want this to be because I might not finish this video before I go out to have my breakfast, because I'm starving, guys. So So this is the open. Then we have the low. This is the low of the candle. Then we have the high. Yeah, this is the high of the candle. That's the highest place that the candle went for, because this is a bullish candle. Then we had the close. This is where this candle closed. So now in this case, this is how the candle will open. Let me use my pattern and explain. This is how the candle will open. The candle will open like this. The candle will open something like this, like this. Candle will open something like this. You guys are understanding this. This is how the candle will open. You can see, and the candle closed just right here. All right. So this is the same thing as this. Now, what am I trying to say? This is where the candle opened. This is where the candle opened. This place. Then we have the low. Price first traded down. That is why you saw this week. Price first went down. After going down, then price now shoot up. That's where you have this big body. Then at this point, price got to the highest. This is the highest point of the price. Then price now pushed back down. Sellers pushed the price down, and the price closed around here. So at the same time, this let me use this to mark this out. I want you to understand what I'm teaching you guys. This is a mentorship class I'm giving to you guys free. Now this is the open of the candle. You can see this is the open, and price traded down first to give us a low. Then price pushed up to give us the high of the candle. All candle trades like this. I'm not saying this is the candle. Like, all candle have a low, high, week, and you get it might have a lower week and not have an upper week. Some candles close without a week. All right, and we have the close here. So this is simple. So what I want to do in this case now, what CRT model is when we have a candlestick. When you have a candlestick like this, let me just show. When you have a candlestick like this, understand? So what we are anticipating is for price. Let's say we have a bullish candle like this. Price should push down, take out the liquidity, and go to the upside. You understand? But this CRT consists of three candles, which will have, let's say we have one candle which will be our range. CRT means candle range theory. All right, let's say this is our candle. We are using this. This is our candle. This is our low, open, high, and close. Now let's say this is our candle. Now after we have this candle, we are going to mark out the high and low of the candle. Now this is a high, this is the low. This is a bullish candle, by the way, don't forget. This is the high, this is the low. You understand? This is the low of the candle, this is the high of the candle. So what are we now anticipating from price? We want price to come and take out the liquidity. Liquidity is just stop losses of people. We want this candle to take out the next candle, to take out this liquidity. Once we have this liquidity, which is a purge, once we have this liquidity taken, we're expecting price to then come back into the range and go ahead and take out the high, take out the liquidity of the high. So this is what candle rate theory is all about. Take out one low and then go for the high. Simple as ABC. Nothing complicated, nothing too serious. Alright, this is what candle range theory means. So if it is the high that price first takes out, if price take out the high first, we'll be anticipating that price should take out the low next. If price take out the high, we'll be anticipating that price is going to come back and take out the low. So this is how it's just going to be. So guys, I'll be going out now to just let's just continue the video when I get back from eating. I'm so hungry right now. So let's go, guys. Let's go. I'm going. I cannot finish the video, so when I get back home, I'm going to continue the video. All right, so let's go out together. Let's get some food, and when I'm back, we will continue the video, guys. So if you are watching this far, make sure you subscribe, guys. All right, let's go, guys. All right, guys. So okay, all right, guys. So I'm heading out now, and how do I look, guys? Drop your comment in the description. Drop your comment in the comment section. I'm so hungry, and the funniest thing about me is I might get to the restaurant and at the end of the day I will be forcing myself to eat. I've been having low appetite for the longest, guys. But let's go, guys. Let's just go. Look at my leg. Yeah, sorry. Look at my leg. But I'm a lot better now. I'm not limping anymore, guys. So let's get back into the video, guys. Let's go home. Alright guys, alright, I'm back. So I'm back from my breakfast. Okay, so guys, this is what I was saying, Alright, after we had this candle, we are expecting price to take out the high or then go back to the low as our TP, or take out this low and go to the high as our TP. Note, it's not going to happen like that every time. Sometimes price we won't just move to the 50% and reverse. You understand? It's not an holy grail. But if you want a more detailed explanation, you can hit my DM. So this is just the stuff here, right here. So what am I anticipating? I'm anticipating that price comes out, take out this low with a wick, then close bullish. Then this third candle, we take our trade and we execute our trade. Let me change the color of this candle so that it will signify a bullish candle. Let's say a bearish candle in this case. Let's use red. Alright. So do you understand, guys? So after price takes out the low, we're anticipating price to go and take out the high. When price take out the high, we are anticipating price to go ahead and take out the low. This is just how simple the CRT model works. This is just how simple it is. So once this price, if this price close like this is not a trading setup for us, because it has invalidated our rule. It must not close below here. It must close inside this range. That's why we call it candle range theory. Right, then we engage on this one for us to hit our TP right there. So let me just show you on the chart quickly. Alright, I took one trade yesterday before the market closed. Alright, so I took this trade. Now what did I see? I picked out this candle, this red candle, this bearish candle. Let me try and zoom out for you guys to see. Yeah, I took out this bearish candle. Now we can notice that this next candle, this bullish candle, this just took out the wick here and closed inside this range, and we are anticipating to take our TP from here. Do you understand? Now this is a high, which is our anticipated TP. So once price have taken the low, we are going for the high. If it is the high that price takes first, we are going for the low. All right, guys. So let me now take you to the 5-minute time frame where I make my entry, because entry is as important as your exit and is as important as anything. You can be right with your bias, you can be right with your direction, but your entry might fuck you up. Okay, look at this example also. We have this CRT low taking. This is an I that is a target. You can see price traded back, then eventually went to the target. So you use confirmation. Now if I just blindly enter, let's say blindly enter here, price would have taken me out here, but I have a way I enter. So let's go on the 5 minutes time frame. Let's go on the 5-minute time frame and let's see the entry confirmation I use. Now this is where price takes out the low. You can see then price closed back inside the range. What did I notice? I saw a fair value gap. So I use my entry down on fair value gap. I can use indicator. I can just find the entry. But if you want to learn the way I do this, you have to hit me up and learn it directly from me. Do you understand? And it is very, very simple, very simple and straightforward. Very simple and straightforward. All right. So this is where I would have taken my first entry. Take my first entry. You can see price traded back into the FVG. My stop loss will just be at this third candle low right there. Then I target this high. You can see this is my first entry. You can see price hit my TP 1 to 3 hour. So this would have been my first entry. All right. So what if I miss this entry? Price kept pushing up, broke structure right here to the upside. There's a way I used just the body of candle to mark my break of structure, then gave us another fair value gap. Let me take this out. Gave us another fair value gap here. If you don't know what fair value gap is a gap between 3 candles. If you want that, I can make a video on that. You can see this red candle traded back in. This would have been my second entry, just right here at the 50. I can use the 50% level. Then my stop loss will just be just right here. Though this is my second entry, and I will target that same high. So this should be around a 2.8 risk to reward ratio. And don't forget, our first trade was a 1 to 3. Then we had another 2.4. Now price kept going up, broke structure again, and gave us another tiny fair value gap here. I don't know if you guys can see this. If you guys can see this, yeah, look at this. This is a fair value gap, and price traded back into the fair value gap also. You can see our stop loss just below the last candle, and our TP just right here. And you can see this is a crazy 1 to 4 hour trade. All right, so we had this 1 to 4 hour trade, we had this 1 to 2.8, we have this 1 to 3 hour trade. Now let's plus everything together. We have how many risks to reward this is if I took all this trade, but I took only 2 entries. Okay, let's say we have 4.55 plus we had 3.19 plus we had 2.85. So that is an insane 1 to 10 risk to reward ratio cut on only this trade. You understand, guys? So guys, this is the end of this video. If you want more in-depth video, you can just comment down below or hit my DM. If you want to register with my recommended broker, I trade with Deriv, link will be in my description of this video. All right, so if you want to learn how I do this thing, just hit my DM. I'm going to teach you guys. All right, so thanks for coming back, thanks for watching. If you enjoyed this far, or you watch this far, you enjoy this sort of content and you want more from my channel, you can make sure you subscribe to this channel and like this video. Put your thoughts down below in the comment section, and also you can join my Telegram channel where I share free trading setup. All right, so I'll catch you guys in the next video. Peace out, guys.